Hey everybody, this is Randy Rodenhouse, and today we're going to talk about why notes. Why buy notes versus buying stocks or bonds or mutual funds or whatever else you can buy out there, or CDs, certificates of disappointment. You know how that goes. So today we're going to talk about why notes and what the benefits are. So let's take a look. First of all, they're passive, right? Passive, meaning we have a servicer that collects the payments and send you a check. So it's mailbox money. It goes right into your mailbox. So every month, the money goes right into my bank account. It doesn't actually go into my mailbox, but at any rate, you know what I'm trying to say. So it's very passive. Number two, it's steady and consistent, right? So I get checks, and if it's a 30-year mortgage, I'm going to get checks for 30 years, right? Each and every month. Now, that's something that's fantastic. I don't have to worry about it. It's kind of set and forget. That's the benefit of that. So it's very consistent, and you get it over a long period of time, and that's fantastic. Number three, there's no repairs or maintenance. Think about a rental property or something like that. You know, have you ever called your lender or banker to fix your toilet? No, I'm sure you haven't, because they're not going to come out and do it. However, if you own a rental property, guess what you're going to have to do? You're going to have to go out there and fix it. So there's no repairs or maintenance in the note business. There's no tenants, no turnover, no evictions, no chasing rent. Have you ever done that? I'm sure you have. It's not fun. Yes, again, rentals are something that we talk about in the income stacker as a great way for passive income, but it's not, to me, as beneficial as notes in the terms of being passive. There are other benefits that we'll talk about when we talk about why rentals. So, no liability. There's no worries if a homeowner slips and falls, or a tenant, usually if you have a renter, right? We don't have to worry about that. We don't have the liability. It is secured. This is one of the most beneficial reasons to buy notes. It's secured on real estate, right? So the investment is secured on real estate, unlike a stock, which is secured by absolutely nothing. It's insured. Again, unlike a stock, the collateral or the property is insured. So we insure the property, make sure that if it burns down or something like that, we'll still get our money. There's no taxes and insurance to collect. You know, the homeowner pays that stuff. TI, which is tax insurance, is typically escrowed with a servicing company, so no need to track it, right? They track it, they basically pay the taxes, they pay the insurance, and if they don't pay, of course, they reach out to the homeowner. Also, notes are typically more liquid than rental real estate. I can usually sell a note off very quickly, whereas a piece of rental property, the person's going to have to go in and do the inspections and all that wonderful stuff. So find it much more liquid. I can sell it off pretty quickly if it's a performing note especially. Also, it's consistently higher returns, typically double-digit returns. So if you compare it to the stock market, for example, I'm consistently getting the same return year after year versus in the stock market, 1 year I'm up and 1 year I'm down. I don't control it. I have no control over that. However, I do control this. If they stop paying, I get the house back and I make even more money. So again, usually my returns are consistent double-digit returns year after year after year. Also, notes are scalable. What does that mean? I can manage hundreds of notes versus managing hundreds of rental properties. Could I do both? Absolutely. Is it harder to manage hundreds of rental properties? Yes. So it's more scalable in my opinion. Also, there's no HOA or COA, which stands for Homeowners Association or Condo Association. Homeowners must pay them. We don't have to worry about that. If the homeowner doesn't pay, they start chasing the homeowner, not us as the lender. There's no property management cost, right? Instead, we pay a fraction to a servicing company to collect payments. So let's look at an example. A typical performing note will cost us $15 a month without escrow. Now, if you did and had a property management company for, let's say, a house that was rented at $1,500 a month, that would be $150 a month for property management fee, which are typically 10%. So would you rather pay $15 or $150? Well, I like the $15. Now, if you escrow, yes, you have to pay a little additional. Usually it's another $15. But still, it's much more expensive to use a property management company than to use a servicer. So those are some of the reasons I love notes. If you have any questions or concerns or any comments, check us out at incomestacker.com, or you can email me at randy@incomestacker.com, and we'll see you on the next video.